Good morning, guys. It is Monday, August 5th, 2024. This Bathrobe business. I'm Georgi Oganov. I actually don't have the coffee. My coffee machine is broken. Well, at least I shouldn't say broken. It needs to be decalcified. I have a Keurig, and we have the hardest water in the world here in my neighborhood. And so I need to decalcify it. So I am coffee free this morning. And also I took a week off. I come back and it's the apocalypse. So the stock market is going crazy right now. I think this is hilarious. And I'll tell you why I think this is hilarious. For those that watch my channel, you know why I think this is ridiculous. For those that are new incumbents, I think I'll explain why this is ridiculous. But I technically wasn't off last week. I was working. It's just I was hiring new people. I actually ended up, well, I didn't fire the person I hired. They just up and quit. So it's kind of funny how that works. So the person I hired did not work out. They just didn't come in the very next day. So that's a story for another day. But let's jump into the market. So what is happening? So right now it's just before 7 o'clock. Market hasn't opened yet. And what's going on? Well, the Dow Jones is down 1,200 points. S&P is down 230. NASDAQ is down another 1,000. Oil is down to $72 a barrel. Everything is in free fall. People are going crazy. The European Stock Exchange is down like 5%. The world is collapsing. So what's caused this? Well, for those that have been up to date, it was essentially the jobs report on Friday. For those that are not up to date, that's what happened. Now, one thing I'm going to undernote here that's very interesting before we jump into kind of the meat and potatoes of this story. I want to show you guys gold versus crypto. So gold is skyrocketing. Well, I shouldn't say skyrocketing up because, again, it's been at near 2,500, right, in the last couple of weeks. It's just at 2,416. So it's actually still at a high level, but not on a level where it's breaking any records. So that's good. The interesting thing is crypto. So Bitcoin, which is really the only crypto I follow, is down to 50,000. So Bitcoin has plummeted drastically, which is very interesting, seeing as how Bitcoin is usually supposed to be the kind of safe haven for events like this. But we've seen time and time again that Bitcoin just essentially follows the market. It is an asset. It is a capital allocation, just like anything else. So when the market is down, it's down as well. This happened during the stock market crash of 2020 during the pandemic. When everything collapsed, so did Bitcoin. Gold did not. And so it functions just like any other asset on the market. It's not a commodity. It is just a financial model. I don't even know what the right term for this would be, but look at this. Over the last several days, it went from 65,000. This was back on Thursday. This is Friday, 64,000. And then now it's plummeted down to 50,000. So it's actually down more drastically than the market itself. Unlike everything else, crude is down a little bit. Gold is more or less stable, but Bitcoin has just plummeted. So that's just something to know about. Now, let's jump into the jobs report. So for those that already know, the jobs report came out. It wasn't the best report. It was low numbers. So the Fed job growth totals 114,000 in July, much less than expected, and the unemployment rate has risen to 4.3%. Now, remember, this is still by traditional models considered full employment. So this is not a panic situation. And need I remind everyone that what we're seeing is not yet actual crash or recession. So the last few stock market crises that we have had over the last, well, I should say the last few major stock market crises that we have been major collapses in entire industries and sectors. So what I mean by that is, oh, by the way, I wasn't sharing the job growth screen. So what I mean by that is in 2008, the most recent one, which actually is amazing because it's almost been 20 years when you think about it. It was 2008. It's 2004, 24 right now. So it's been 16 years. So when that collapse happened, it was a collapse in home prices, in mortgages, in an entire sector of the economy. The dot-com, same thing. It was a bubble and an overinflation of a sector of the technology sphere. Prior to that, it was 87. It was overvaluation of stock markets. What we're seeing here is not collapse of any sectors. We're not seeing any bubbles. I mean, honestly, AI is probably poised to be the next bubble. But what we're simply seeing is just weakness in the job market, and everybody is in panic mode. That's why I'm not too concerned about this. I think this pullback is great. What I'm going to do is probably buy Google and Microsoft, not Apple, because I'll share why in a second. But I'm going to use the dip because probably in the next 30 minutes when the market opens, the Dow Jones is probably going to lose even more, probably near 1300. It may rebound. You never know. Sometimes these things happen in the pre-market and then the market actually opens and everything's actually not as bad as everyone thinks. There's not massive sell-offs. And then because of that, the Dow Jones actually raises. But I'm going to use the pullback to buy Microsoft and Google personally. I think those are the companies that are doing the most with AI right now. Not Apple, because I'll share why in a second. But this is why it doesn't worry me. Also, the job numbers, while weak, again, we are seeing high employment. It's still at 4.3%. Healthcare led the gains with 55,000 jobs. Construction was second with 25,000. But you have to read down into the article to find that hospitality and leisure, which is the metric I always use to determine if the market is strong or not, is actually in third position. So hospitality and leisure added 23,000. So they're in third position, not in the first or second, as we've seen in some job reports over the last several years, but they have been in this position before. Also, if you read through this article, you'll find that a lot of the job cuts are coming from temporary hires and part-time workers. So this isn't necessarily anything to be concerned about. Also, if you read through the report, you'll find that wage growth over the last year has been at 3.7%. That says it right over here, which is interesting because that's much closer to the inflation number that we have talked about here on this channel. This is what I think the inflation number actually is 3.7, because we've looked at rises in wages. We've looked at rises in every single commodity there is. We've looked at rises in home prices nationally. 3.7 to 4% is where we've kind of settled, and I've talked about on this channel. So I think that's very interesting that wage growth is at a similar pace. So overall, this isn't necessarily anything to panic about. Now, I didn't mention why I'm not going to buy Apple. So my reason for not buying Apple is essentially what Berkshire Hathaway has done. So Berkshire Hathaway has dropped 7%. Apple shares dropped 7%. This is from this morning, as Warren Buffett's company, Berkshire Hathaway, slashed a stake in half. Now, this is interesting because they also slashed their stake in Bank of America in the last few weeks. We reported on it in this channel. So they seem to be sitting on a large amount of cash. They're liquidating a lot of their assets and increasing their cash pool drastically. So I think they do think that there's going to be a major market correction in the market soon. But as of now, I'm not too panicked. I'm going to use the trade. But that's one of the reasons I'm not going to buy Apple, is because I do think that it's I don't want to say its best days are behind it, but there's definitely a lot of headwinds with Apple, and there's not a lot happening there on the AI front. And again, I've talked about how I think AI is largely overrated. However, no one can argue the fact that it's a powerful market force in the fact that it raises stock prices. So that's that. Now, a couple of stories I do want to highlight this morning. I want to show you guys this one. So this is from a professor at the Wharton School of Business, which is amazing to me. This just kind of shows you that professors are kind of full of crap. So the Wharton School of Business, Jeremy Siegel, says the Fed needs to make an emergency rate cut. Now, remember, last week, the Federal Reserve did have a meeting and said that they're holding steady. They're still waiting for September, it seems like, to make any noticeable cuts, which I think, honestly, they shouldn't be doing to begin with. I've talked about why on this channel before. But he's saying that the Fed needs to have an emergency meeting right now and cut half a percentage point. No, I lie. I believe in this article. He says 75 basis points, so 0.75%. He wants an emergency cut of that. And then in September, in a month, he wants another 75-point basis cut. So 1.5% in about a month. And he's saying that's the minimum. He wants that as a minimum. He thinks that interest rates should be at 3.5 to 4%. That is absolutely insane. Here's another little note to contradict that. For the first time in years, mortgage rates are dropping. So mortgage rates and refinance rates, as of today, August 4th, this is from yesterday, rates dropped over 60 basis points. So the average for a 30-year fixed loan is 6.12%, And for a 15-year rate, it's 5.35%. If you look at car sales right now, there are amazing interest rates. My brother just brought a brand new car, an EV Rivian, for something like 0.25%. It is ridiculous how good the financial market is getting right now. And this is with no basis cuts. And this is amazing. This is what we should be seeing. So if Jerome Powell had the cojones, he would hold out, because this is a great correction that we're seeing in the market. We're seeing actual corrections. Remember, they love to tell you about how Wall Street reflects Main Street. It doesn't. Every time Wall Street is doing well, Main Street is probably doing bad. Right now, Main Street is doing great. Jobs are plentiful. If you need a job, you can find it. I don't care what that 4.1% interest rate is. I'm hiring for 2 different positions, and I still can't find qualified candidates. They're literally walking off because there's better jobs on the market. We've got mortgage rates finally falling for the first time. We've got inflation coming down. Granted, I've talked about how I think that's an imaginary number, but this is more evidence of why we should stay the course. Now, I know Jerome Powell's not going to do that. He's going to cut next month, but there's ample evidence to show why he shouldn't, because we're actually seeing headway right now. Next thing I'm going to bring to light, let's see, what was the other thing I wanted to share with you guys? Oh, this is an interesting one. So SoftBank, again, when Wall Street does bad, Main Street does good. SoftBank shares tanked 19%, wiping out $4.6 billion from founder Mayoshi's son's fortune. So these are the guys that are behind like some of the biggest firms in Wall Street. So they backed Uber, they backed WeWork, they backed some of the biggest ones there is. And these are the ones that I will primarily say are like your money printing machines, the ones that can just print money and give it to non-viable businesses that can push out Main Street. This is what I talk about on my channel all the time. And they're down 17%. No, I'm sorry, 19%. That's fantastic. That's fantastic. That's a good thing. Also, here's another story talking about how crypto is selling off 3.67 billion in just the last 24 hours. So yeah, shedding 3.67 billion in over a 24-hour period. So yep, European markets plunge 3.5% as losses mount amid global volatility. So this is fantastic news. This is really fantastic news, because this means that the market is actually correcting. And this is nothing wrong with the market. Use this to your advantage. Remember, when people are greedy, be fearful. When people are fearful, be greedy. Go out and buy something today. You're going to thank me tomorrow. That's pretty much it. I will be back tomorrow, and I'll talk more about the stories of the day. I hope you guys have a productive day, and I'll see you all in the morning.